So much of the content is how-to content, and how-to content is certainly important, but you have to really start with a basis of philosophy, not just how to, but why to.
Welcome to the Real Estate Executive Thought Leadership Podcast, a fast-paced show featuring focused insights from executive thought leaders in the real estate industry.
In this episode of RE EXEC TL, we interview Jason Hartman. He's the president of the Hartman Media Company. Jason is a noted public speaker, media personality, investor, podcaster, and an advocate of education for real estate investors. In the interview, we talk about how leverage enables you to accomplish bigger things, the urban migration towards the suburbs, and why suburban rental housing is a good investment. We'll also learn why deals need to be win-win for both parties, and how remote working is better for the environment, productivity, and housing demand. Let's get started. Hi, Jason. Welcome to the show.
Thanks, Kirky. Great to be here.
So let's talk about your professional background. Please tell us a little bit about your experience in real estate.
Sure, I saw an infomercial of a real estate guru when I was 16 years old, and after growing up relatively poor in Los Angeles, California, and not liking that too much, I thought, this looks interesting. And that was, I guess, back in the very early days of infomercials, not like they are now. I went and got the guy's book, read 3 chapters, put it down. My mom picked it up, got interested in the topic, started investing, and I went to my first real estate seminar at age 18 and decided to get my license as a real estate agent at age 19 in my first year of college. And I sold real estate part-time while I was going to college, and then made it a full-time career and bought my first investment property right when I was beginning selling real estate. And it all went from there. I was 20 years old when I became a landlord. So that was kind of fun, and well, wasn't always fun, I must say, but it was profitable. And then really pursued the industry, both as an investor and a broker, and then got into podcasting much later than that.
What appeals to you about real estate investment, and what inspired you to create your company?
I think one of the really key things to success with anything in life, Kirky, is it comes down to one word, and that word is leverage. So, with real estate as an asset class, it enables you to gain a lot of leverage. So, you can do things that are really bigger than you would normally be able to do. For example, if you want to invest in stocks, bonds, or mutual funds, the typical scenario is if you want to control $100,000 in that marketplace, you need $100,000. But with income property, you can put $20,000 down and still have control over a $100,000 asset, just as a nice round numbers example, because the bank, the lender, becomes your partner for 80% of the deal, which is a pretty great thing. Back in the 90s, I published my first book on personal branding. It was called Become the Brand of Choice. And what I realized, and people kept telling me as I was going through my real estate career, is that I was using the concept that was unknown at the time called personal branding. Or I used to call it relationship marketing when I would give seminars and so forth. And that also enabled you to gain a lot of leverage to expand your persona into essentially a proxy of yourself, a brand. A brand is basically a proxy. And so when it comes to assets, I love income property real estate investing because of leverage. When it comes to thought leadership, and content marketing, that also gives you a lot of leverage. So, both of those things, although they're different, they have that common characteristic of offering great leverage.
Let's talk about professional direction. What does success look like for you in 5 years?
I just think it's really expanding the brand, the influence, helping our content reach more people. I also purchased a software company a few years back, and I'm really very interested in expanding the influence of the software and reaching more people there as well. And again, another great thing about software, there's that famous quote, software is eating the world, right? And software, what does it do? It offers tremendous leverage. You can reach a lot of people, you can empower a lot of people with software, with knowledge, and with leverage through investing. So, all of these things offer leverage.
What professional development tools and resources are you engaging with?
I use lots of them, constantly being curious and learning. Learning, I think, is a very important. We all must be curious people and lifetime learners. There's a saying I like to use: all the earners are learners, and all the leaders are readers. So, constant enhancement of knowledge, just improving skills and knowledge on a daily basis.
How do you decompress from daily business?
Usually just quiet time, maybe a little bit of meditation. I can't say I'm big in that, but I think quiet time, exercise, that quiet time a lot of times involves learning, which I find to be very pleasurable.
Let's talk about your company. What does your company offer and who do you serve? In other words, what are your core competencies and unique value proposition?
I have a few different businesses, but basically, the main and most profitable business is a real estate investment company that has a unique business model. We basically teach people how to invest conservatively and prudently, and then we offer a referral network where we basically connect buyers and sellers nationwide, or really worldwide, I should say, because we have clients from all over the world, with sellers of properties that make sense based on our criteria and are in markets that make sense based on our criteria. And then the third step is we offer ongoing support and software to help them make sure that they are managing their portfolio successfully and easily.
Okay, let's talk about investment strategy and trends. What are the three dimensions of an investment?
There are actually more than three dimensions, but one of the things I teach, because it's catchy, is what I call the three dimensions of real estate. And in that, I talk about how interest rates and market activity are interestingly non correlating when it comes to rents and the value to landlords. So, for example, in a time when interest rates are low and it's easy to obtain mortgage money, homeowners, or I should say home occupants, have a very easy time buying properties, and that actually softens the rental market. But when interest rates are high, the rental market tends to strengthen because tenants do not jump ship to become homeowners. So they stay in the renter pool, thereby increasing demand for rentals. So when people talk about the market, Kirky, I think that's a very misleading thing because, first off, whose market? Is it a buyer's market, or a seller's market, or a broker's market? We don't know what that means. And then after that, you would have to segment by location. There's no such thing as a national housing market in a country as large and diverse as the United States. We've got about 400 local markets. You'd have to segment by price, by property type. For example, is it high end properties, low end properties? Is it residential properties? Is it retail properties, office properties, industrial properties? I mean, there are so many segments and layers to really tell people that they need to peel back the onion on discussions like that. Very, very important.
How can investors take advantage of the next downturn?
That kind of supposes that there will be a next downturn. I think the economy is in real trouble. No one would deny that. But interestingly, we are seeing this mass migration from urban areas to suburban areas. And as we see that, at a time when everybody maybe would have thought that the market would be on the rocks and things would be very difficult, the market is actually booming. There are massive shortages of inventory. So the real question is, which trend will be more powerful? Will it be the trend of an economy that is very unevenly distributed in terms of some people really struggling, unfortunately, and some people doing very well? I saw a chart recently that looked at some of the richest people in the world, billionaires, and they have become very wealthy during the pandemic and the subsequent civil unrest. But obviously, we know that many, many millions of people are struggling at the same time. So, this is a very uneven situation, and it's very uneven geographically as well, as we see this flight from high density urbanized areas. One of the reasons for that is that in urban areas, people can't socially distance. They don't feel safe. It's very tough to feel safe when you have a virus concern and you have to take elevators and mass transit, and virtually every place you go is crowded. So that's one problem. And interestingly, all of these same areas are the areas that have been affected by civil unrest at the same time. So, first we had the coronavirus concern, and now we have a big civil unrest concern. And both of those things are bad for high density urban areas. America is a very unique country in the sense that it is known for suburbia. And that is not true around the world. I've been to 87 countries, some I've visited many times. I was born overseas, and suburbia is uniquely American idea. In the post World War II generation, as the baby boomers came back from the war and the economy reassembled and we went into a boom time, baby boomers built houses and created suburban markets and suburban areas, and the US had this love affair with the automobile. And there was a lot of commercialism and romance built around the automobile. And the automobile made suburbia possible. Whereas if you look around the world, of course, they do have suburbs, but not like in the US. They have cities and they have rural areas. They have urban areas and they have the countryside. There isn't much in between when you look around the world. It's either one or the other mostly, not exclusively, of course. But in the US, a huge swath of the United States is dominated by suburbia, tract homes and suburban markets. And this is where the action is now. This is where people are going as we are moving into a time where people are just relocating in mass.
What asset classes are most in demand?
Residential real estate in basic bread and butter style housing. Simple housing that provides what people need in suburban markets, housing where you can leave an urban area and basically get 3 times the size of the house for 1/3 the cost. For example, I have many friends that live in places like New York City or downtown LA or any of these expensive markets, Chicago, whatever it is. And they live in small apartments or condos and they pay $3,800 a month rent or $4,200 a month rent, something like that, for tiny little places. And they can move to a suburban market and for $1,500 get a house that's 3 times the size with a 2-car garage. And they have room for a home office, a home gym, and they're teleconferencing anyway. It doesn't matter if they live 5 minutes from their office or 500 miles from their office, it's all the same.
How can you protect yourself in a recession?
Buy good quality properties that have high demand. Housing has universal need. Basically, everybody needs a place to live. There are 3 basic human needs, as we've all heard: food, clothing, and shelter. And have those good, desirable rental properties so that if times get really bad, you catch people moving down the economic ladder. And so maybe they owned a house before and now they need to rent a smaller house. Or if they're moving up the economic ladder, maybe they're moving out from their parents' house and or moving out from their first apartment and they'll move in and rent your single family home. So either side of that scale, you do well when with people moving up or down the economic ladder.
Are environmental and operational sustainability part of your strategy?
We don't construct properties, so we don't really deal with that. So I wouldn't say that's really in our ballpark. I mean, the homes that we sell are already constructed, and we do very much believe in remote working, which is very good for the environment. And we've seen that. It's amazing. During this pandemic, what has happened, for example, the city of Venice, Italy, where I've visited, that was highly polluted before. Well, now the water is crystal clear because human activity has declined and everybody's staying home. And nobody wants to stay home all the time, but why commute to an office 5 days a week? Remote work is where it's at. So people do need a little bit larger place to live, but they can have a home office and avoid that commute that pollutes, and it's just better for everybody. Saves money, saves costs, reduces car accidents, reduces expense, reduces car insurance costs. It's better for the environment, obviously, and it's more productive. I mean, if you don't spend hours and hours of your life every week commuting, you just go right to work and you're there already.
Let's briefly touch on leadership. How would you describe your leadership style and how do you motivate your team?
I wouldn't say I'm any expert on leadership, but I have studied in the past. And Warren Bennis, I remember years ago, one of his books on leadership, very, very good. Also, I think Stephen Covey's Seven Habits of Highly Effective People is really just a core book on leadership. He also wrote a book called Principle Centered Leadership, which I think is great. But following the seven habits strategy is really a leadership strategy, and realizing that when you enter into a negotiation, it has to be win win or no deal. What I like to say is that comparing it to real estate's an interesting asset class because when you buy a property, you don't get it right away. It's not like buying any of the other widgets we buy in life, right? When you buy a property, you basically have to wait. So you wait for the settlement process. You might wait 60 days or 30 days or 45 days or maybe much longer. And what tends to happen is that if the deal wasn't good for the other party, you're in a situation where they're going to find a way to weasel out of that deal. So the saying I like to use is the best real estate deals never close. They never make it to the closing because if someone realizes they got taken advantage of, they will find a way to back out of that deal. So if it was too good a deal for the buyer or too good a deal for the seller, it's very unlikely that it will make it to the closing table. So win win philosophy is really where you have to start with everything. I have found myself in the past with vendors and so forth negotiating too good a deal, and the deal might work for a while, but they'll find a way to say, hey, this deal isn't good enough for me. So you got to approach things with a win win philosophy. And that's what keeps deals together for the long term.
Let's talk about marketing. What does thought leadership mean to you?
Thought leadership is basically sharing expertise with the marketplace and doing it in a scalable manner.
Is an inbound content strategy worth the time and expense?
Oh, yeah, I think so very much. I mean, my primary inbound marketing strategy or podcasting would be an example of that. And so I've been podcasting since the old days, about 15 years ago, back in the time when nobody knew what a podcast was. And basically, that was a way for me to share my experience and all the things I've learned over the years in the real estate investing game with a large number of people. Just invoke the law of tenfold returns, where you just give, share knowledge, and eventually people will come back and repay you for it by doing business with you. And you'll gain a lot of clients through that.
Is social marketing an essential part of your inbound approach?
We aren't super successful at social media. I personally think my best social media marketing actually takes place on my personal Facebook page. And it's very, no one would really call it marketing directly because there's very little actual quote marketing unquote going on that page. But I find that that is the highest engagement and really the best place. But certainly there are entire industries, careers built on social media marketing. I just can't say it is one of our main things. I think it's great for people that do it and it works and who are experts in it. You might consider YouTube and podcasting form of social media marketing. And if so, then I guess we're pretty committed to that. But in terms of Facebook and Twitter and that kind of stuff, we do it, we play in those sandboxes, but I can't say that we are experts at it.
Are you leveraging public relations, and is podcasting a part of that?
Podcasting, yes. PR, a little bit, but not a major focus area for us. We're more in the content marketing, thought leadership area.
How important are monitoring and tracking in your campaigns, and what KPIs do you focus on?
With something like podcasting, we don't stress and agonize about numbers. A lot of podcasters do, and they want to talk about how they have so many downloads and so forth. First off, a lot of that stuff is rigged. A lot of those numbers are basically fake. That's the first thing we all have to realize. But assuming they're true, engagement is much more important than having huge download numbers. Engagement and revenue, I think, are much more important. That's really where the rubber meets the road. I don't look at my podcast statistics very often. I just know that we have engagement, we have very engaged listenership and viewership, and they come to our live conferences, now virtual. But either way, they buy properties through our network, they buy educational products we offer, they buy software we offer, and that's really, I think, the most important thing.
What is the most crucial element in positioning your brand?
Trust.
So, can you tell us a little bit about your podcast? And also, I see you have an online conference coming up.
My main podcast is called The Creating Wealth Show. The Creating Wealth Show. Started that many, many years ago, and we're into episode like 1500 and something now. And I have over the years started a whole bunch of other podcasts that have really been a great education for me on a variety of subjects. And that's been very interesting. Sadly, I haven't taken the time to monetize many of those, but would like to. And we have done live conferences, Kirky, for many, many years. And we have our 22nd anniversary of our biggest conference coming up. But it's the first time, even though it's the 22nd anniversary of it, it's the first time ever we're doing it virtually. And we're actually very excited about it, I have to tell you. We've been able to attract speakers and an audience that we might not usually attract. Now, in the past, for our live events, we have had people fly to Southern California, where we host many of them, not all of them. I'll use that as an example. We've had people fly from Europe, from the Middle East, from Asia, from Australia, and not just Australia like Sydney, but Perth, Australia, which is really far. Last year, we had a gentleman fly in from that. He said he flew 22 hours. And I said, "Are you at least going to spend some time here and, go to Disneyland, and go to, Los Angeles?" And he said, "No, I'm flying right back. I just came for the conference." And I was honored. Frankly, I mean, that's just incredible. But as a virtual conference, you really have a lot of opportunity to attract a larger audience and a larger pool of speakers with much lower speaker fees or even free speaker fees, speakers that would normally charge because they would have to travel. You'd have to at least pay for their travel cost. And now it's basically, hey, just jump on Portal with us and give us a 45-minute keynote, share your screen, show us charts and graphs, take some Q&A, and that's it. It's a low commitment for them. And hey, talk about being better for the environment, right? Much better way to go. So I'm very bullish on online conferences. We'll see how this one goes. It's coming up very soon, and we're very excited. Ticket sales have been brisk, so we're very excited about it.
Could you share your website so listeners can learn more about you?
Sure, Kirky. People can visit me at jasonhartman.com. That's just my name, Jason Hartman, HARTMAN.com.
What is one closing insight you'd like to share for executives and investors targeting growth?
Oh gosh, boiling it down to just one is really difficult always. But just to wrap it up, I was very fortunate to discover four great mentors at the young age of 17 years old: Dennis Waitley, Zig Ziglar, Earl Nightingale, and Jim Rohn. And those four mentors changed my life. I was fortunate to interview Dennis Waitley on my podcast before. He's the only one still around. And I would just say, study the great works of history that nowadays it seems like so much of the content is how to content, and how to content is certainly important, but you have to really start with a basis of philosophy, not just how to, but why to, and have some guiding principles for life. And I think we tend to lose sight of philosophy. And I don't just mean the great philosophers of old, like Aristotle and so forth. They're very interesting too. But the modern philosophers, the business philosophers, like the four mentors that I mentioned, and there are many more. I'd say the late Stephen Covey is another one. And there's just some really great stuff that, the how to, the specifics will change as new tools come out, new platforms, new software, new ideas. But the philosophy is enduring. And I think that's very important.
Thank you for joining us today, Jason. This has been an exciting conversation.
It's my pleasure. Happy investing and much success to everybody.
Thank you for listening. Please like and subscribe to get updates on our upcoming podcasts. Share the inspiration.